Hi, and thank you for watching us here at Tax Talk UK, where we talk about all things tax and also consider other important aspects of working for yourself, being self-employed, running a small business. Today, we're going to talk about capital gains tax on a rental property at the point of sale. Before I do, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you should need to, as well as being able to find other information that we have available on a whole host of different topics, all aimed at supporting you with your tax issues. So back then to capital gains tax. So the specific question was, how much tax would I have to pay when I sell my rental property? So that's what we're considering today. So we're thinking about personal property that you own personally, that you rent out as a private landlord, in effect. And so what we're thinking about is you've come to the point where you want to sell the property, and you are wondering how much tax you might have to pay. So the main things that we need to consider are how much you paid for the property. If you bought it a very long time ago, then it may be that you need to refer to the HMRC scales. But assuming it's sort of in the last 30 or so years, then you're just looking at the price that you paid for the property. You're also looking at the fees that you paid when you purchased the property. So solicitors' fees, any survey fees, stamp duty, those sorts of fees associated with the buying of the property. And you're going to add those onto the purchase price. And then you're going to look at the sale price, how much you actually sold the property for. And then you're going to, this end, you're going to be taking off the fees that you've paid your solicitors, your estate agents. So in effect, the way to think about it is you're looking at what you actually paid for the property, plus all of the fees, is your sort of purchase cost. And you're also going to look at your sale price, less all of the fees. And then for the in-between time, we're going to be looking at any capital expenditure that you spent on the house. So anything that you've paid out to improve the property. So if you have rented the property for the entire time that you have owned the property, then of course a lot of the expenditure, the sort of day-to-day expenditure through the year would have been revenue expenditure, and you will have claimed that against the rental income for your income tax. So we're looking at the things that were capital expenditure that you were unable to claim against your rental income. So that is the capital expenditure. So therefore we're going to take the sale price less the fees, and then we're going to take off of that any capital expenditure, and then we're going to take off the full cost of buying. So if you remember, that is the purchase cost plus the fees that were paid, and that is the profit of the property. And this is assuming that you have owned it the entire time you've owned it, you've used it as a rental property. Now, if you have had any personal use of the property, perhaps you own that property for 10 years, for example, and you lived in it for 5 years and you rented it out for 5 years, then you will be able to claim some residential relief, known as private residence relief, which effectively apportions the amount of time that the house was your private residence. And there's also certain rules depending on if you mostly owned the property and you rented it out for a little while, and depending on when you sold it. So if any of those scenarios apply to you, then you need to have a look more into it to see what private residence relief is available. But as I say, we're just talking the sort of basic, simple, how do you calculate it? So we're going to just assume that you've had the property as a rental property for the whole time that you have owned it. So when we've done that, so we've looked at, so if you remember, we've taken the sale price less the cost of selling. We've taken off of that value any capital expenditure on the property throughout the time that it's been owned. And then we've also taken off the full purchase cost, so the purchase price plus any costs of selling. Now that is your profit from the sale of the property, and that is what is going to be taxable for capital gains tax. Now, if you own the house jointly, then the profit will be split in the same share as the ownership is split. And so you look at your own profit, you will be allowed an allowance each year for capital gains. So that is completely separate from your income tax personal allowance. Everybody is allowed a capital gains allowance. So you need to find out what that is for the relevant year. And for that amount, there will be no capital gains. And above that, if you're selling property, it is higher, it is 18%, whilst you're in standard rate. And then above that, it increases to 28%. Now, what you need to bear in mind is that it's also in terms of working out your taxable threshold, the level of tax that you're going to pay 20% and the level of 18% and the level of tax that you're going to pay at 28%. We're also going to reference your other income for the year. So if, for example, you have other income that already uses all of your personal allowance and all of your standard 20% tax, then you're going to automatically go straight into the high rate band for the capital gains. So you would pay 28% on the whole amount. If you still had some of your standard rate left, then on that amount you would pay 18%. So as you can see, it's really important to actually be aware of how much tax you're going to have to pay, and also to be sort of thinking about sort of the timing of this and the other income that you have. So say, for example, if 1 year, if you're earning into high rate tax threshold, and you're planning at the end of the tax year to retire, and then the next tax year you wouldn't have any income, then apart from maybe a small pension, it may be that delaying the sale may be tax efficient, because then you would be able to pay some of the tax at a lower rate. But then, of course, there's lots of other things to consider. So it might be that you could lose that amount on the sale because the property prices drop. So if you're not sure in terms of you've worked out what the tax is and you're not sure on the timings and how to make sure that you do the most tax efficient thing for you, then of course it's always advisable to get some professional advice. And as we always say, if you are going to take professional advice, please make sure that the person that's giving that advice is fully qualified to do so, that if applicable, they're a member of a professional body and that they have indemnity insurance. So hopefully this helps to give you a basic understanding of how you will be taxed when you sell a private rental property. So effectively, we're looking to calculate the profit, and that is what will be taxed. And the tax, the profit will be referenced to your personal income to work out which appropriate rate of tax you will pay. And in terms of calculating the profit, so we're taking the sale value and the sale price less any costs that you've incurred in the sale, so your estate agent, solicitors, and so forth. You're going to take off any capital expenditure on the property since through the time that you've owned it, and then you're going to deduct the full purchase cost. So when I say that, again, that is the purchase price plus the cost of buying the property to get your to get your profit. So hopefully that this is clear and makes sense and helps to give you the starting point of working out what your tax liability may be at the point when you dispose of your rental property. And as I mentioned earlier, if you have lived in the property for any time, then please do just check out the rules on that. I shan't go into them in detail now, but you may be eligible for some relief for the time that you've lived in the property. Thank you very much for watching, and if you haven't already, please do subscribe to the channel. Thank you. Goodbye.